Hello, Jordan Elkin from the marketing team at TrueAccord. I can very confidently say, given the global audience that we have here, good morning, good afternoon, and good evening, wherever you may be located. It's our incredible pleasure to be joined by two industry luminaries today, Jan Hansson, the Vice President of Debt Collection at Klarna, and Ohad Samet, co-founder and CEO of TrueAccord. They are going to be our guides through a fantastic discussion about digital debt collection today. Let me provide you with a quick overview of our roadmap. We're going to begin with brief introductions to each of our two speakers. They'll tell us a bit about their backgrounds, their company, what they've learned over their years in the industry. We'll transition to a brief dive into some of the industry forces that have made digital collections more of a necessity than ever. We'll then go to a cozy fireside chat where Ohad will take on the role of interviewer and ask some questions of Jan. We'll move into Klarna and TrueAccord's 4-step playbook for launching and maintaining a high-performing digital debt collection strategy. And we'll end with a recap. Just by way of housekeeping, I'd like to underscore some of the guidance that Lauren provided in the beginning. This is fully intended to be a participatory conversation. I'm incredibly excited just looking at the chat screen so far. As a reminder, you can submit questions either through the chat function or through the Q&A button located at the bottom panel of your Zoom window. We will be collecting and moderating those questions at the end. Additionally, just so that you know what to expect once we all sign off and go back to our regular daily lives, we'll be following up after this webinar with the presentation deck, a recording of the session, and a brief survey to find out what you thought about it and how we can continue improving. Without further ado, let me transition to two gentlemen who are significantly more interesting than myself. I'd like to start with you, Jan. Tell us a little bit about your career, yourself, and about Klarna.
Yeah, sure thing. Thank you. My name is Jan Hansson. I work as a Vice President Collection at Klarna, which I actually been doing for the last 12 years, so quite a long time. And before that, I've been in different positions, different debt collection companies since 1991, both in Sweden and companies that are covering the Nordics and the European market. So that's my background. And of course, staying 12 years at the same company is probably never the original plan. But back in the days when I started, we were about 120 people present on 4 markets. And today, Klarna has more than 3,500 employees, and we are present at 70 markets across 3 continents. And we have some plans to launch in some new countries as well during this year. So yeah, so that's a short introduction of me.
Thank you. Maybe we'll find a way to extract from you over the course of this conversation your launch plans. Ohad?
Yeah, hey everyone. And Jan, really excited to have you. Hi everyone, I'm Ohad, I'm the CEO of TrueAccord. I've been in machine learning for financial services for about 15, 16 years now, fraud prevention, credit underwriting, risk management, and now collection and recoveries. We launched TrueAccord about 7 years ago, trying to reinvent the experience for consumers in debt collection. We believe that the market was changing and that we could use a machine learning-based, digital-first, mobile-first solution that will, based on catering to consumer needs and expectations, will collect more and do that with much better customer experience. We offer our technology as a third-party post-charge-off solution called Recover, and as technology for your call center, the white label SaaS product for early-stage collections called Retain. And we've scaled to more than 300 employees, hundreds of clients, 6 million active accounts that we work with. So pretty sizable in the US only right now. Who knows where else in the future?
Thank you, Ohad. Ohad, you've spoken eloquently before about why digital debt collections is not just increasingly a necessity, but is actually a benefit both for lending organizations and for consumers. Can you share a little bit about what you're seeing?
Yeah, so I'll talk about three elements here, and then through the conversation with Dion, we'll talk about other things. Three things. One, consumer preference. Much like everyone on this call, consumers in debt prefer digital communication. They don't want to pick up the phone. They don't like dealing with written mail. They would like chat. They would like email. They would like to be contacted at a time and place and channel that is convenient to them. And they want to be in control of that. And we're seeing a major change in that market, a major shift from the traditional way of doing collections into the way that TrueAccord is doing it in the past few years, again, based on consumer preference. And that is something that drives a lot of changes in fintech in general. Now, the second thing is regulatory pressure. Whether it's the CFPB's new debt collection rule, the FCC's blocking of telemarketing calls, state level action, we're seeing a lot more pressure on the traditional way of doing collection, a lot more enablement of digital first collections. We've had the previous director of the CFPB, Richard Cordray, for a fireside chat with TrueAccord a few months ago. And the tailwinds for this model are very strong from the regulators as well. And finally, nobody knows what's going to happen right now with COVID. I think short term, there's a lot of uncertainty, but one thing that we know is that consumers are going to continue to feel distressed. And in order to service your consumers and consumers in debt effectively, we have to offer technology at scale that can actually service them. And if and when defaults start spiking, we can't hire enough call center, we the industry, I mean, cannot hire enough call center people to service everything and to really handle the stress that consumers are in. And we've seen that in March of last year. So technology and services like TrueAccord can scale to that level, can meet that requirement. Technology is what's going to allow us to keep consumers out of distress or help them get out of it once they're in it.
Thank you, Ohad. And to double click on each of the points that you've made, and sketch out the arc of the debt collections industry, both the history and where it's going next, I would like to literally put the two of you on the hot seat with a fireside chat. Ohad, you've graciously agreed to step into the role of interviewer here, so let me hand over the microphone to you.
Yeah, so it's an easy job for me because I'm going to ask Jan questions. But if you jump to the next slide, Jan, your experience is extraordinary. Decades in this industry, you've seen it all, and across multiple countries, a lot of transitions. Tell us a little bit about this shift from analog to hybrid to now fully digital. You know, as an overarching theme, what was that like, and what was the shift like going through the whole thing in the past few years?
Yeah, sure. Yeah, back in the days when I started in the debt collection industry, it was everything was very analog, and what we primarily work with, and I would say that all debt collection company work with was sending physical letters and doing outbound calls. Of course, there were some differences depending on country. So, for example, the country where I live in Sweden, it was, and it's to some extent it still is quite usual to send legal applications as well, because we have a simplified way of doing that according to the Swedish regulation. But other than that, I would say that it was primarily focused on physical letter and outbound calls. But of course that have changed quite dramatically and until today. But before the analog era, or after the analog era and before the digital era, there were sometimes there were more of testing and experimental, and that it took some time actually, because when companies started to use email and text messages, and we did the same, it was primarily due to trying to reach the customers, and we didn't really had that much of plan except for reaching out to them and hopefully having them calling back if they needed to set up an installment plan. But today, I would say that we are definitely in a fully digital era, where both the outreach dimension, but also the engagement and settlement dimension has moved from agents to a more digital way. And I would say that this development is not only great for the consumers because it have given them the flexibility to decide where and when and how to engage and to resolve their own debts. But it also means that the agents that previously were working with everything now can actually focus more on the more complex cases and spend more time and resources on that. So overall, I think it's positive for the consumers, but it's also positive for the debt collection industry.
Yeah, absolutely. And from our perspective, I can say we see 96% of resolutions completely automated, don't involve a person. The other 4% are, by and large, 100% inbound communication. So it turns us into a customer care function rather than a collection function, calling people and trying to convince them to do stuff. So moving on, there's something very interesting that I want to double click on. Through that, the last little bit more than a decade that you've been in Klarna, your group has been tremendously integrated in the overall brand and relationship building aspects for Klarna. You think constantly about how you enable the approval of additional business, how you reacquire consumers, how you care for consumers' long-term financial health. But then again, you are in the collections and recovery side of the house. How does that work? Tell us a little bit about that, because you're really thought leaders in that area.
Yeah, I definitely think that it's not only primarily the debt collection industry. I would say that it has not only changed in the way of using technology, but there is another change as well, and that is primarily regarding the customer experience, because I think it's never been more important than it is today to take care of the total customer journey. And it's never been more important than today to make sure that you build and protect your own brand. And to be able to do so, you need to make sure that all different processes within your company actually are aligned with that. And so that doesn't exclude the collection. I think the challenge is probably even bigger and greater within the collection part, because it is harder, because some consumers actually consider debt collection as something negative based on previous experiences. So, but coming back to a little bit regarding what we talked about before in the previous question regarding the consumer preferences, and I also believe that the consumer power actually have increased quite dramatically. When consumers are not happy with the handling, they have the arena in terms of social media and Twitter and whatever they use, and they use a lot of channels to write things about companies. And if you are not good in taking care of that part, but of course also the proactive part and making sure that the consumers should not be disappointed or having a negative experience. So, but the consumer preferences, I think that is a general key actually, because yeah, as we all know, we wear our cell phones with us. We are always reachable. Consumers today expect actually to decide when and how they would like to interact with you. So, and therefore I would say that sending physical letters and dealing a lot with outbound calls, that doesn't suit the majority of the consumers, because they want another service. So, and of course for a company like Klarna, we do not want to send customers to collection or debt collection. But of course, sometimes we still need to do that. And but when doing that, our overall target is to trying to rehabilitate as many customers as possible, and that it should not jeopardize the customer experience. Because I truly believe that it is possible to have a positive consumer journey, despite that you actually end up in debt collection, because it's very much about how you will be treated.
Yeah, absolutely. And I think I really think that this is for some of the people listening in, this may be the first time that they've heard a lender talk exactly in these terms. You know, someone who leads collections, but also is so focused on customer experience, online reviews, customer reacquisition, It's always in the background, but that laser focus on making sure that this is apparent through the whole value chain is thought leading. And this is one of the biggest reasons we've enjoyed so much partnering with you on all of the experiments and all the tools that we're launching that are unique to Klarna and to the segment. So moving on to the next one, I think everyone would be fascinated to hear a little bit about your perspective on scaling this, right? From 100% in-house in 4 markets to 100% outsourced in 17 markets, tremendous growth. What was it like? What did you learn? What did you wish you had known? Tell us a little bit about that.
Yeah, okay. It can be a long story, but I will try to keep it as short as possible. Yeah, when I started at Klarna for 12 years ago, it's true that everything was taken care of in-house, and we were present at 4 markets. And the main reason for why we actually decided to keep the debt collection in-house was that we didn't really felt safe at that time to outsource our customers, because and that was primarily due to how debt collection companies in the Nordic at that time looked at their customers. So we actually decided to we should keep we should have full control of the customer journey, and as a consequence of that, we decided to set up our own debt collection company. Plus, it's another reason for keeping it in-house was that the debt collection industry in the Nordic at that time, they were quite old-fashioned actually. When we started to talk about sending emails and sending text messages, they couldn't do that. So they were so focused on letters and in some countries sending cases for legal, because one need to keep in mind as well that the regulations looks quite different from especially between Europe and US, but also within Europe. Because in the Nordics, for example, you are able to charge late payment fees for reminders, for debt collection letters, and when you send them for legal, you can charge even more fees. But it was primarily due to that we wanted to have full control of the customer journey, and we were so convinced about that using email and text messages would actually contribute much more to the liquidation rates and the overall collection performance. And if we then also could reduce sending cases for legal, it would have a much better customer experience. So, and when we then later started launched in Germany and Netherlands, we experienced the same situation in both Germany and the Netherlands, that no one actually used email or text messages at all. So therefore, we followed the same procedure and set up debt collection businesses there as well. And it served us well at that time, but I would say it was more about that we couldn't really find partners that could deliver what we actually were asking for. So, and we did a great result because we independently that we run it in-house, we always benchmark the small part of the portfolio. And I think we won actually all of them except for one. But maybe for 5-6 years ago, it's things starting to happen actually on some specific markets. So whenever we found a potential partner that we thought had the right mindset and also were willing to adopt to this new technology, then we started to, in a small scale, outsource, and then step by step we decided to outsource more. And and actually it has happened a lot of things the last 5 years on most markets. Some are more mature than others, but and it was actually last year when we decided to close down our last pieces of in-house debt collection. So today, yes, we are 100% outsourcing our debt collection process, but we are still taking care of what we call the pre-debt collection. That is to say, sending reminders and making sure that the people that just forget to pay, that they get enough with reminders. So using the different channels to make them pay. But the debt collection is 100% outsourced, which I'm very, very happy about.
Yeah, that is a fascinating transition. Moving on to the next slide, just to highlight kind of a complement to what you just said, I think historically, looking at the collection industry, collection vendors were call centers, specialized call centers, and the collection strategy teams inside financial institutions viewed them as, we'll tell you what to do, who to call, how much to call, and so on, and you will just execute on our strategy and you'll manage the headcount. As we're moving into a lot more technology in this space, a lot more focus on user experience and digital communication and data, it is becoming a practice that you want someone who has the time and talent and money to invest in. And all of these areas that we're listing here is what leads to Klarna's recommendation of focusing on your core business, because you are focusing on getting people back on track on pre-collections, acquiring new business, launching new markets, launching new products. And it's our job as TrueAccord to focus on instrumenting the data, using the 16.5 million, the data from 16.5 million consumers that we've interacted with to benchmark and to build better models, to engineer our systems to scale on the ledger and the balance management and all the services that we need to offer to consumers in late stages, in addition to compliance and knowing which vendors to work with. So this is why, to me, this becomes a much more meaningful, much more complex, but also liberating partnership for you, so you can focus on the things that are important to you and partner with us on it instead of having to dictate day by day what your vendor does. If we want to jump to the next slide, could you talk a little bit about your considerations when you look at vendors? What's on your mind? What's important to you? You look at multiple markets, you have multiple vendors. How do you think about that?
Yeah, I would say that we use more or less the same strategy regarding partners as we do when we are hiring people, because we truly believe and have always believed in trying to hiring the best people in each and every position, independently if it's an engineer or an analyst or a salesperson or a person that sits in the reception. It doesn't matter. If you want to be the best, then you need to actually have the best people, and then you can actually create a team around that. So it's a little bit like building a football team, I would say. And when it comes to partners, we consider that in the same way. We only want to work with the absolute best partners on each and every local market. And when doing that, one can say that we're primarily looking at three different elements. And first, the customer-centric, meaning that it need to be a company that have understood the importance of taking care of the customers. And what I do then is not only my proposal will be not only look at the words that are written or told you, but look much more for evidence in how they built up the processes around customer experience and how that strategy actually look like. Do they deal with personalization of content, channel, different kind of offers? And another thing which is also very important here to be able to deliver a customer-centric solution, I would say, is to how they take advantage of the data in the collection process. Not only measuring, but also actually take action based upon the data, because that can actually help out quite a lot. I partly covered the multi-channel digital collection, but I think when it comes to this, one need to understand that customers today, they have different requirements than they had for 20 years ago. They actually expect to be able to be offered self-service. And of course, I met a lot of different debt collection companies and in different countries, and it's quite often that they have self-services, but sometimes they are not that user-friendly. It's can be everything from extremely complicated to log in to that you have very limited possibilities to do anything. And then it doesn't really make sense because it need to be a self-service that actually suits the customers and where they are actually able to do most of the things that they need to do. And the third part is the
if I
result
can
part. Yeah, sorry.
throw a comment in here, when we started, we spoke to some, say, called more traditional providers, and they said we have an online portal, and our goal is to have 10% of our payments come through the portal. And now we are at 96% of resolutions. I'm sure everyone's advanced, but that speaks to your point that just having the presence online is not the same as being really digital first.
Yeah, it's a big difference with saying that you are something and actually have understood how you actually could do it. So that I would say that is my two other things that I think one need to look into. And the third, of course, when talking about results, but when we talk about results, we do not only look at the liquidation rates or collection results, but also the retention rate of customers that entering debt collection. And what I mean with that is that we are continuously measuring out of all the claims that have been sent to debt collection, how many of those customers are coming back and trying to make a new purchase at Klarna? Because I think that actually tells something about their experience. Because if they have been treated in a really bad way, then they would probably never come back to Klarna again, or at least it would take a very long time. And we also use that as one parameter when evaluating debt collection companies when benchmarking. So we do not only look at the liquidation rate, but also looking into more of the soft values.
That is fascinating and a standout, I think, in our market. One follow-up question here. How do you think about the interplay between debt sales and debt servicing? I know you use debt sales in multiple markets. We work with some great, large, reputable, super sophisticated debt buyers who also, by the way, care about user experience in addition to results. But you have a more nuanced approach based on basically your data and your strategy, because when you sell the debt, you kind of lose the relationship with the consumer. But in many cases, that may be the right decision based on your specific strategy.
Yeah, it's correct that we on some markets we do a regular debt sales, but I would say that since the debt sales market looks quite different depending on where you are. So on some markets it works really well, and not only, and I'm then not only talking about the price levels, but because when we are selling claims, before we do that, we always do a due diligence of that company just to make sure that even after we have sold off the claims, we want to make sure that those customers should still be treated in a Klarna way, meaning that we want them to be treated fair and correct. So it looks different, but on the European market, we do quite a lot of debt sales on a monthly basis. But in US and Australia, we have not been selling off any claims so far. We will probably look into that in the future, but of course, it's a last solution, I would say, because since we have as a target to trying to rehabilitate as many customers as possible, we would prefer to do as much as possible before we sell off the claims.
Jan, Ohad, thank you so much for a stimulating conversation. It's truly staggering considering the pace and time scale of a wholesale transformation of the collections industry from analog to digital, and equally impressive looking at Klarna's evolution over that time frame. I know that there are many participants on the call at all stages of maturity on the digital debt collections journey who would love to understand Klarna's secret sauce, how you've been able to successfully scale your debt collections operations. And in fact, the two of you have been gracious enough to agree to walk us through TrueAccord and Klarna's 4-step framework for achieving digital debt collection mastery, 4 critical capabilities. I'd like to hand it over back to you, Ohad, if you don't mind kicking us off. We'll look at how it's done.
Yeah, absolutely. And I just want to say I see questions coming in, so I'm going to try and be as brief as I can. Um, Step one, reach. You got to reach consumers with the right message, and that means finding the right channel. We at TrueAccord like to say that email is the big river that everything flows into. We like email because of the real estate. It allows us to provide all the disclosures we need to show consumers, to run a lot of experiments. We send tens of millions of emails a month with high open and click-through rates, and complement with additional channels. Text messaging, letters when we have to, pre-recorded voicemail, and even chat and other channels, depending on the client and depending on the segment. And Jan, Klarna has been a leader in that, partnering with us on developing the regulatory infrastructure to be able to use additional channels. Our expansion of a texting program with you is getting up to 6 times the response rates compared to just emails or just other channels. How do you think about that, adapting to the different regulatory environments? Can you talk a little bit about how you think about multi-channel?
Yeah, it's true that we are using both physical letters and email and text message, and we also deal a lot with chat, becoming more and more popular. But another thing which also have had a huge positive impact when looking at one of our KPIs, which is the share of transactions to debt collection, is the introduction of the Klarna app and the possibility to send push notifications. But I think it's always about trying to find what is the right way to reach out to this specific customer group, or because there are quite big differences. So when we look at, for example, the share of transactions to debt collection, we see big differences. There are differences between country, but there are also big differences within the country. We look at that from a gender perspective, an age group perspective. We look at from a merchant perspective, meaning that does it matter if the customer had bought purchased from that merchant or that merchant, and then we try to draw conclusions from that and see how we can be better in reaching out to customers and reducing the share of transaction to debt collection. Because what I think that when looking at those customers, of course there are can be many different reasons for why you get a reminder or a debt collection letter. But what we're trying to catch from our side is quite a big share of those customers, and that is customers that have just forgotten to pay, which is quite common, at least in the early stage of the collection process. And we're trying to address those in the best possible way. But then, of course, there are other customers that are not paying because they're not, at the moment, not able to pay, or they are more in a long-term financial hardship. And those need to be addressed in another way. So we use definitely a multi-channel, all available, I would say. And this is also something which is very important for us when it comes to outsourcing the claims to debt collection company, that we want that debt collection company to be able to offer a similar multi-channel strategy as we do, because we would like the customers to have the same experience independently if we outsource it or not.
Right on. Moving on to the next one, tailoring. And when we say tailor, we think about right time, right channel, right content, right offer to the consumer. We work with, of course, we work with Klarna. We work with products from deep subprime loans and credit cards to prime loans and other products, from $50 average payment to balance to 20,000, and competing and winning in those environments. And for that, we need to target and be able to tailor to different consumers based on their behavior. We don't use demographics to decide the pattern of communication, the channel, the voice, and so on. one of the things that we do with you that we don't do with others is a very sophisticated settlement strategy experiment based on, to some extent, your internal scores. You've had a lot of data that you use to develop those scores. We are launching more and more of these with some of our clients. Can you talk a little bit about that? And I'll mention that the settlement experiment already is seeing about a 13% performance bump compared to control, which is pretty significant. Can you talk a little bit about that, how you develop those scores and think about experimentation?
Yeah, absolutely. Yeah, it actually correlates to what we touched upon just before. So it's about that we're trying to identify what is the reason for why this customer doesn't pay. Have the customer just forgotten to pay, or is it any other reason? And this group is actually where we're trying to identify customers that we and our model says that those are probably in some kind of financial distress situation. It can be very limited that because a lot of consumers, they are able to pay their debts 11 out of 12 months per year, but all of a sudden something happens. So what we're trying to do, I have a team located in Berlin that belongs to the debt collection group. It's for the data scientists, and they are building those kind of distress scorecards where we're trying to predict and identify those customers before we send them to debt collection. And so currently what we are doing is that we do, based on this distress score, we place the cases in different buckets, and regarding those customers that we do not believe that they will be able to pay fully, TrueAccord will offer them a settlement instead. And then, of course, we do it as an A and B test, which we love. Just to make sure that do we run those tests in a proper and fair way. So I'm super happy about that, because I think one of the biggest challenge for debt collection companies actually to improve the part regarding customers that are really hard to cases that are really hard to collect. So, and I think this, even if it's maybe too early to say exactly how it should look like, but I truly believe in that this will be a success. Absolutely.
Yeah, that's the beauty of our engine. We can incorporate additional data from you to even kind of drive our decision making to be even more targeted to your consumers based on your data. Not finally, the next one is empower. Once consumers are on a payment arrangement, we want to keep them on a payment arrangement by giving them great UX, keeping them on track, encouraging them. For us, for example, it's about making customizations easy. So when we launched a feature to allow consumers to move the next payment in a payment plan by a few days, I thought I would be paid on a Friday. I'm actually paid on a Monday. I want to move it. I don't want to talk to anyone. That reduced breakage rates of payment plans by 13% and also reduced inbound contacts to our call center by 11%, because consumers want to do it, but they don't want to talk to anyone. The other element is reacquiring consumers, something that we're going to work with you on this year again, where you're leading kind of out of our group of clients in thought and leaning into it in your work with us. Can you talk a little bit about that, the payment plan management, reacquiring consumers, and so on?
Yeah. For a company like Klarna, it's of great importance that our target is always to try to reduce the share of transactions to debt collection. That's a key. But of course, there will always be cases that we need to send to debt collection, and those should be the more difficult ones. And if you are in some kind of financial hardship, you will probably not be able to pay the full amount at once. And therefore, I would say that setting up payment plans or installment plans, that is a tool that is used independently if you're in the US or Europe or Australia. It's a common tool within the in the collection industry, and it's a good tool. But it's also of importance how you do it, because even if you as a consumer set up an installment plan which you believe you will be able to manage, all of a sudden something happens, and if you then are not able to adjust that payment plan, there's a big risk that you will stop paying at all. So and also looking into, and I know that from since we have been looking at that in quite many countries, that there many times are a correlation between the length of the payment plan, the amount that the customers is going to pay, and sometimes I've seen in some countries that the debt collection agencies are pushing quite hard to get as much money as possible, which I fully understand, and it makes sense. But there is also a balance between what is the customer actually able to pay versus what can we accept as the lowest amount to pay. And I feel very confident by the way that you are dealing with this, because I know that you look into those features in terms of the risk for breakage, and also offering great flexibility to the consumers, which I believe long term will have a positive impact on the total recovery rate.
Yeah, absolutely. Predicting breakage and dealing with that ahead of time is something we're really focused on right now. And the last element is scalability. And for us, scale is three things. One, serving 6 million active consumers means tens of millions of messages a month that need to be reach people's inboxes. They need to be opened. They need to be clicked through. And doing that, it just takes a lot of effort. It means scaling call center operations. And when shelter-in-place hit, it was very easy for us to take a few dozens of agents and move them to work from home, because 96% of our resolutions are completely automated. And finally, it's scale in challenging the network. We came in, and we'll see on the next slide, we were about 15% better than our competition, and that challenged them to push and get closer to us, where now we are continuing to improve our models as we get more data from Klarna. We are continuing to launch additional channels. We're continuing to innovate in partnership with you so that we can continue to challenge the network and continue to grow. So as you scale, what does that look like for you? How do you manage that complexity?
Yeah, I would say it's coming back a little bit to what we talked about before. Because for us, it's one of the challenges is to make sure that we are always identifying the best partners on each and every local market, and we do that by focusing on the three elements which I mentioned before regarding the consumer-centric and the digital and multi-channel, and companies with a more holistically effectiveness regarding both the collection rate, but also the post-collection retention rate. So yeah, I'm super impressed about the result that you have delivered, because we have seen great progress in both in terms of collection rate. It was a great uplift. Maybe I'm not that surprised, because I've seen that from a lot of other markets. When as soon as we're starting to deal with the digital possibilities in an intelligent way, then most of the time we see a quite big uplift actually. So it's also something positive for the debt collection companies, I would say. And
Yeah.
but of course there is always a first mover advantage. The company that are first on this on the local market will always have some advantages. Absolutely.
Yeah, and we love that, and we'd love to see the industry follow in our footsteps, because you know, we want to see consumers being treated better, and then we will come up with the next innovation. We were committed to that. Absolutely. Right on.
Thank you, Jan. Thank you, Ohad, for laying out the 4 pillars of a successful digital debt collection strategy. I must say, it's a very stressful job here monitoring the chat and the Q&A, because we're seeing a record outpouring of participation, curiosity. And so I'm looking forward to transitioning to the voice of our participants here. By way of quickly recapping the fabulous conversation that you've just had, we'd start by pointing out for the 3 reasons that Ohad elucidated early on, changing consumer preference, an evolving regulatory environment, and macro financial trends, particularly financial hardship, that digital debt collection has transitioned from a nice to have to a need to have. As Jan spoke about so eloquently, when we think about a digital collections experience, it's so much more than just outreach. It is truly an end-to-end consumer experience that touches on how we communicate with consumers, the self-service experience that we provide them, and ultimately how we rehabilitate and reacquire them, transform them into brand advocates. And as the two of you spoke about, the payoffs are both immediate in the form of higher liquidation rates and certainly long-term in the form of a stronger brand. I'd like to transition now to some of the wonderful questions that we've been getting. And I'm gonna try to juggle these while also directing them to the person I think is most appropriate. I'll start with one, and perhaps Ohad, you can chime in first on this. The question is the following: how do you find the balance between continual automation / efficiency and the human element of debt collection?
Well, if by human we mean that the asker thinks that only humans collect from humans, then I would say that we have proven that this is not true. Consumers don't want to talk to a person unless they have to. And if they want to, they can email or call our call center, where they have people who are well-trained, not paid commission to convince them to pay, to give them service. If the question is about the empathy in debt collection, I would say what we've found is the better we service consumers, the more they pay, not by coercing them, but by giving them the treatment that they want, by putting them in control, giving them a sense of agency, and then staying out of their way by reducing friction. 85% of our traffic is from mobile devices and tablets. This is what people want to do. So we're really gratified that we give consumers what they want, and then they choose to pay, and then everybody wins, basically. So that, to us, we lead with empathy. We don't think there's any contradiction here.
I must say, I agree, especially regarding that. I think the most important thing here is actually to offer the alternatives that are according to the customer preferences. And I see this on most of the markets that outbound calls and inbound calls, they are actually in general decreasing because. And I think it makes sense that if one just put oneself to the same situation, that let's say that you have a debt collection case and you do not necessarily want to talk to someone. If I could actually easily manage to handle this myself, just by setting up an installment plan or pay or whatever I would like to do, I do not really believe that the absolute majority would like to talk to an agent regarding that. It's much better if you do not need to do that. But of course, there are probably some customers that actually would prefer to have a call, and then of course we should be able to offer them that.
Jan, the next question is for you, sir. You alluded to some of the challenges of building in-house as you expanded your geographic footprint and the complexity of your product portfolio. Our participant is curious, can you elaborate on that? What were some of the challenges that you faced when you reached a certain level of scale? What was the tipping point in realizing that there might be benefits in working with third-party collectors?
I think we come into a situation where when we started launching quite many countries, we were in the Nordic countries, Germany, Netherlands, Austria, and at that time we still had it in-house debt collection. But when we were about to launch in the UK, then we started to see it puts so much effort and so much resources if we should be able to be the best debt collection agency in each and every local country. It doesn't really make sense. Of course, it's possible, but still, it requires a lot of resources to do that. And even if you believe that you are able to do so, I still believe, coming back to this regarding focus on the core business, because that is what we must do. and collection has never been Klarna's core business, and it will never be. It's a very important process, but I still believe that it must be possible to find really great debt collection agencies in each every local market. And so I think it was a tipping point when we actually decided to launch in the UK and then later on US. And of course, we at that time, we knew that this is, we are going to launch in much more countries than those. So we need to find another solution. And then we put much more effort in pushing the DCAs that we wanted to work with and to develop a solution that we would prefer, and that is a digital solution. So I'm not sure if that was an answer to the question, but
that was an A+ answer to the question. And as proof that no good deed goes unpunished, there's a follow-up question here, which is you work obviously with a global network of third-party partners. What are some of the tools and practices that you use to monitor performance, compliance, vendor risk management amongst your collections partner network?
Yeah, first of all, I have a team with analysts that are following up different KPIs regarding the DCAs on each and every local market. We're following up on the country basis, but also on a debt collection basis. And we, of course, we do what probably most companies are doing. We are following up the collection rates, of course. We are following up disputes. And on some markets, we have also pushed for that or required that all the DCAs need to send out surveys after each and every contact they've had with our customers. And we are writing the questions and also the way of how to measure them. And also put requirements, and that this should not only be done on the Klarna level, but also on an agent level. Because that was actually an idea. We started doing this when we had our in-house, the debt collection in-house. We started to measure that. And what we saw then was that it has a huge impact by starting to measuring the customer satisfaction in each and every contact, independently if it was email or an inbound call or outbound call. And actually, the agents were, in the beginning, they were a little worried, but after 1 month, they really loved it because, what I also saw was, especially among the agent, that there was a clear correlation between high customer satisfaction and the collection rate figures on agent level. It was absolutely clear. So after a while, I could just sit and listen to people, and then I could say that person actually had one of the highest collection rate, and that was true most of the times.
I'd like to go into a rapid fire mythbuster round of questions. We got a few questions here about best practices within digital debt collections. The first is it true that outbound calling has zero additional value if you have a digital collection strategy? Let me put it differently. What's the value add of outbound calling alongside a digital collection strategy?
Well, I'll answer that, but before that, I want to say there are a few questions here that are kind of in the same theme, which is like, is this really true? Can you really replace the call center? And the answer is yes, folks, it is really true. We don't make outbound phone calls unless the consumer asks us to. Okay, we do on occasion use API-based pre-recorded voicemail as an add-on to other channels, but we predominantly use digital communication. And as a result, our call center is a customer care center for inbound. By the way, 70% of the inbound is email, only 30% of the inbound, 30% of 4%, right? 1.2% of all our interactions with consumers is consumers calling us to talk to someone because they want to. The vast majority of consumers, if you give them good UX to their channel of choice, will not want to talk to a person and will want to handle all of their business on their own, which turns us into a technology vendor and not into a call center with some technology sprinkled on top.
Next Mythbuster question. This is less a Mythbuster, more a curiosity question. Our participant asking a great question. How important is day of the week and time of day in personalizing communications? So going back to the framework, Jan, that you laid out, right message, right customer, right channel, right time. Let's focus on the time piece. Anything, Ohad or Jan, that you've discovered through your experiences around how important that element is?
Yeah, I would say yes, it is important. So because if you are able to identify when is the optimum time to send this message to this customer, it's quite natural. You can probably just look at your own private inboxes in your email inboxes. Sometimes they're quite full. Because people, of course, they have different behaviors and routines. And so if you're able to identify when is the best time, then of course it has a much better result, yes.
Yeah, a recent refresh of our timing optimization algorithms showed an upside of 22 to 40% in response rates compared to random sends. So absolutely significant impact.
There are so many great questions, and unfortunately we're coming to the end of our time. What I'd like to note here, we're capturing all of the questions, and we'll make a note of following up where possible with the people who asked them. We appreciate the participation. Let me ask one final question, and would actually love to get both of your thoughts on this. What is the next frontier for the collection space? The key trends or developments that are most top of mind for you right now looking into the future?
Well, I can start, and Jan, maybe you want to wrap this up. In the US specifically, and Jan can talk about the global, I think a lot of more traditional folks have been waiting and seeing until the CFPB said the last word about what's coming in terms of what's enabled and not enabled in debt collection. That rule has landed in the end of last year, and it's going to be effective and as of end of November of this year. So I think there's been a reckoning. Everyone's realizing that phone calls are officially limited, that digital communications are officially not the future, but the present, and for some of us, the past. And I'm excited to see that shift in terms of how the industry transitions. Honestly, because I want to see consumers being serviced better. And the thing that you're hearing from Jan here, that I don't think people, maybe some people realize how forward thinking this is, to measure your vendors based on customer satisfaction and to think about net promoter score and to think about reacquisition. I want to see everyone go there, and I feel like we are moving in that direction. It's incredibly exciting to me.
Jan?
Yeah. What's happening on the European market? Maybe I should cover them. I think that what's going on at the moment and last year, especially, and will probably happen even more during this year, is a lot of different regulation. And of course, for a company like Klarna, we all expect that the buy now, pay later area will probably be regulated in quite many countries. And we do not have anything against that, actually the opposite. So it's always good to have clear regulation and rules about things. It's actually more complicated when it's not. So other than that, I think that it started to happen a lot of things within the debt collection industry on the European market, but there are still quite few players actually that have come that far that TrueAccord have done. We see them. We have one really good example in Australia. We see a couple in Germany, and they are step by step, they are popping up actually. Sometimes it's brand new companies, and sometimes there are more old debt collection companies that are starting actually to move and taking big steps in what I think is the right direction.
On behalf of the entire group of participants here, I'd like to extend our warmest thank you to you, Jan, and to you, Ohad, for sharing your insights and perspective with us today. Thank you as well to all of our fabulous participants for your engagement, the insightful questions that you've asked. On behalf of all of us at TrueAccord, thank you all once again, and we hope you have an excellent rest of the day.